AFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar where we cover the price movements and the upcoming week for major currency, commodity, indices, Bitcoin and index markets. So more specifically, we're going to look at the euro dollar and dollar yen, pound dollar and Aussie dollar, gold, Bitcoin, WTI crude oil and the S&P 500. Now if there are some extra markets you'd like us to cover, please drop a comment in the video. We'll be more than happy to cover it next week, or if there's some particular price action setups you're interested in, again drop that comment and we'll be more than happy to cover it. And if you're enjoying these videos, of course, please click that like button, it really helps. So without further ado, let's have a look at the euro dollar chart. So this triangle breakout that we'd referred to last week has been working out pretty nicely. You can see that little bounce off the apex, and we've been running higher, and we're up at 4-month highs now in the euro. And so this is our 4-hour chart. Remind ourselves the situation of on the daily. We've got big overhead resistance above 115. So 115 just about was the cap to the rally in late Feb, early March. Obviously had some crazy volatility in FX markets during the outbreak of the pandemic, and we settled down and we remind ourselves that we had a big rally up, consolidated, and it looks very much like, as we had been suggesting throughout, that this consolidation phase is over and we're breaking out to the top side. Why is that? Well, it looks like EU leaders reached some kind of breakthrough in their meeting this weekend to make a EU recovery fund. So the fund has not actually been agreed yet, but there is the hope in markets that it will be agreed this week. Of course, markets may end up being disappointed about it being done this week, but I think there is a sense of urgency that this fund will eventually get done in the next maybe couple of weeks, with a few more summits at the least, and so that would be a good thing for Euro-wide fiscal integration, which has basically been the plan all along, but it's been a little hard to make happen. It basically reduces the risk premium for global investors of investing into Europe when things are just a bit more integrated. So again, looking out to this weekly chart, big overhead resistance around 115. You can see when we bottomed out in 2014 and we had almost 2 years of consolidation, broke out to the top side, but come 2018 we slumped back down again and slid back into the bottom of the range, but never quite tested 105. And here's where we find ourselves again: rally up, consolidation, potentially break out to the top side. Remember, we've already failed at 115 once, and you can argue this consolidation phase under 114 was also part of the kind of getting rid of sellers process required for prices to move higher. And so to me it seems like pretty good chances that we can actually rally up through this 115 and sustain a rally beyond it without any particularly meaningful correction. But of course it's a big level. You can see that right here on the chart. 115 through 116 really is quite a big zone of resistance, and so if you see some decent sell setups in that 115 to 116 zone, history is on your side for it working out. But for the time being, if you're trading with the trend in the short term, you can see it's very much to the top side with that 115 barrier coming up. So moving on to sterling. A bit of a choppy old week last week for the British pound. This is the general place that we find ourselves. Could probably, well, that 126 makes a bit more sense in the short-term chart. I'll show you why in just a minute. But you can see that 126.50 is this level through here, which has been causing us some difficulties. And so now we've pulled back from that 126.50. And we just want 125 to hold as support, and so far it has. So let's just have a look at that quickly. So we had the false breakout, came back into the bottom of the range, held this support down here, rallied up, banged into that support again 3 times, 125 has acted as support once with a false breakdown, a couple of times having not quite made it. We're pushing up to the top side again, so we just wanted the idea that 125 is holding as a base before the idea that 126.50 actually finally breaks and we can test the top side and potentially move out of this sideways range. But we're not quite there yet. A move up through 126.50 is obviously the ultimate confirmation, but a move beyond 126 would be a clue to me, because you can see here the kind of progress of how the price did things. Stalled roughly at 125 after this leg up, rallied up, came just short of 126, pulled back just shy of 125, eventually made it up to the old long-term resistance area, pulled back through 126. Buyers came in around the 26 zone, pushed it up to the highs again, failed, and so having not been able for these buyers at 126 to be enough to take it to old highs, the price rolled over again to collect new buyers down here at 125, and they've kept buying so far. So it looks like 125 is doing it, the big round number, and anywhere close to 125 is while it holds, offers you some opportunity to get in on some sort of topside break. 126.50, it's held so far as resistance. It's possible that we drop down to this 122 zone again, but it does sort of look more like a consolidation than a top pattern for the moment, at least while we're above that 125. Dollar yen, a tricky pair to trade at the moment in my view. If you're a range bound trader kind of trading a return to the mean, it's been quite decent, because you can see, looking at this daily chart, and you just put this 50-day moving average on, every time the price has moved somewhere away from the 125, it's just going back to, and so you had some extreme examples of rallied right up here, but eventually came back to the mean again. Dropped down here, came back to the mean, dropped down here, came back to the mean, rallied up here, came back to the mean several times on a short-term basis. It's just pinned itself to this 50-day moving average at the moment. And if you're drawing support and resistance, you can say that basically this is the higher level of resistance, this is the lower level of resistance, and we've got this kind of internal zone that's been working too. So for the time being, that hasn't changed, and we need that another at least sizable break of the internal layer, like one of these or these. And then of course we want it to take out these longer term levels as well, and I think after this prolonged period of consolidation, we should get a decent rally up to either these lows or these highs once this kind of red zone, if you like, breaks down. But I'm not going to drop down to the 4-hourly chart, because you can pretty much see what the trade in place there is. It's this volatility move up to the 50-day moving average. There's no real trend-based setups in dollar yen at the moment. Now, one market that obviously has been trending but just consolidating as of late is the Aussie dollar. And so this is just our daily chart to remind ourselves again that we're banging into this resistance and the 0.70 level. And if we go down to the 4-hour chart, I think we have made a bit of progress here. So you can see that this is the kind of triangle pattern that we've had in place. We had these two highs, we peaked above it, hit the 0.70, came down to the support zone here, and we formed a little support zone above the 69, basically in the midpoint of the 69 and the 69, say 40 area. And we bustled around there, but kept banging into 0.7 as resistance, and we made a little bit of a breakthrough last week, where we kind of rallied up through 0.7, and now these old highs are acting as support. So at the moment, there's obviously buyers coming in at this old resistance, trying to use it as support, leveraging for a move to the top side. When I say leveraging, I don't mean the use of leveraging your trading account, but using this this old resistance as support, as a springboard area for a potential move to the top side. Should we fail at these old highs again, I think at that point we start trying to think about a top and a possible roll down through this rising trend line. But you know, we're not there yet. There is some negative divergence, some bearish divergence happening in the RSI on a 4-hourly basis, you know, where the price had made a new high but RSI hadn't. but I think for the time being the trend is up, and we're trying to key a break to the top side. To me it seems too obvious after such a prolonged period of sideways motion that actually 0.7 is the top. You know, you would have thought this topping process in at 0.7 would have been a bit quicker than we're seeing at the moment. Tops are not normally as prolonged as this. Normally tops are quite quick, and bottoms are more longer term. Obviously that's not what we've seen with this V-shaped bottom, so we could be flipping ourselves on the head here. I guess from a dollar perspective you could say this is a prolonged bottom. So let's see. It's obviously a two-way market in FX. Okay, jumping over to gold now, and gold has been in obviously a decent trend. We know last week that it hit those 9-year highs. Was it the week before? Anyway, recently those 9-year highs, and it's just been taking a breather since, holding on to 1800 for the most part, sort of ranging around it. We're assuming another topside break here, just going with the trend. You know, the lowest risk opportunity have been buying at the bottom of this triangle, this rectangle rather, but now we're approaching the top side of the triangle. It's more like a breakout trade. You can see that we've not had an intraday breakout through, maybe we should use our crosshairs, since a few hours after that record was made, but around 1813. So I think if you want an early tip off that this breakout is taking hold, an intraday break on the 4-hourly or even the 1-hourly chart above 1813 I think would give you a clue before what many may be watching, which is a daily close probably above. Let's zoom in a little bit to, yeah, the other thing to watch is you can see right through here it's really like pretty much 1810. If we get a daily close above 1810 or even an intraday close above 1813, I think that's our clue that the upside break is about to happen, or is indeed happening. Of course we could roll over, but this just doesn't look like a top at the moment. We could roll over into just a larger correction, of course, but I think that would, we'd start looking into these old highs for that correction to run out of steam to maintain this uptrend. WTI crude, we've had this rising trend line. In a way it looks a little bit like Bitcoin, which you'll see in a minute. Rising trend line support, but just been buffering into this 42-ish. Similar at 44 on Brent. So certainly possible that we kind of just dive over. There is some, this is better seen on the 4-hourly chart. We have been kind of putting in a series of lower peaks throughout this kind of process here, but in a way that to me looks like maybe a sign of strength, where price has actually been holding up even as momentum has been turning lower. So I think price has been stable throughout this period of lower momentum. Once the momentum picks up and drives the price, I think that's when we get our topside breakout. So there you can see the trend very much to the top side here, but just struggling to get through 42. It may need another drop lower. This pattern, to my mind, has already kind of failed. This kind of ascending triangle, could arguably call it a wedge. Maybe we need a dip down to 35 before this trend continues. That's possible, but it still looks like it has a positive bias in this market. Over to Bitcoin, and so we've got our potential rising channel through here, but obviously for the moment we're being capped by this descending trend line, so it's making a bit of this triangle pattern basically between 8,800 and 10,000, and you can see again a little descending triangle through descending trend line through the momentum, so that will give us a good early clue. I think maybe signs of an early bottom here, get the bottom, get the trend line break. Probably, given how close the price is to it, that trend line break in the RSI might even be a confirmation for the break in the price to go up and at least challenge the 10,000 level, again, and then I suspect even come up and challenge this the top of this channel line up here, and that would take us into these old resistance areas back here. It's a tough road ahead for Bitcoin because there's lots of peaks to get through, lots of old resistance, but for the time being the trend is up and we're above this fairly flat looking, I believe that's the 200 day I've got on the chart. Oh, 120 actually, interesting. Okay, and then last but not least, the two averages I've got on here are the 50 and the 200, I believe. The 50 and the 200, so the classical moving average setup, and you can see that they're aligned in a kind of positive way. The 200 has been acting as support on the way up on a 4-hourly basis, of course, not the daily chart. On the daily chart you can see it's basically the 20 period on these couple of occasions, the 50 period, sorry, that acted as the support, and we're up testing the resistance now. And then on a kind of short-term basis you can see that we had these peaks, we managed to kind of chop through and hold them. We made this peak through here, rallied up, tested the old high, dropped down quite severely but held the lows. We came up, gapped through the old high, and now we're just consolidating above that peak now. And so all looks fairly bullish, and it looks to me like setting up for an upside break, which is quite positive price action in the face of some disappointing earnings, notably from Netflix last week, that heavily missed expectations, and obviously they've been a kind of darling of the market throughout these kind of COVID-19 times, with the idea being that everyone's inside watching Netflix. Well, there was growth, but just not quite as much as people thought. That hasn't damaged sentiment yet, and actually the market looks positive in the face of that bad news, which is always just a bullish sign in itself when the price action remains strong in bad news. Do remember though that we've got some other big earnings out this week. Twitter, Tesla, Microsoft, Caribbean Cruise on a potential underperformer. So there's a few interesting ones to watch this week. To watch out for those. They could determine whether we get this breakout in the S&P and risk sentiment more broadly affecting things like the Aussie. Okay, good luck trading this week, everyone. Thanks very much for watching, and if you do enjoy these videos, please of course subscribe to the channel, and then you'll make sure you don't miss the next one when it's released.